Good morning and happy Monday, and welcome back to another edition of Accessible Alpha's Market Update for the week beginning Monday, August 26th. It's great to have you back. My name is David Baines. I am the principal at Pantile Investments, a little under the weather, so I may make this a little shorter than I typically do, but a lot of great stuff happened last week. I think there's some cool stuff happening next week. I want to make sure everyone's up to date. So before we dive in, as always, please keep in mind, anything that I talk about here is strictly for educational and informational purposes only. So please don't construe or explicitly take this information as investment advice. These are just things that I look at as a professional trader, things that I pay attention to in the market, and I like to share them with folks so they can potentially pay attention to the same things and maybe become a more effective trader or investor in the market. So just please take this information as is and certainly not as investment advice. So a lot going on last week, so let's dive in. First things first, the leading economic indicators came out, and what happened was it is down, which is seemingly a bad thing, but the leading economic indicators is an index that is a composition of a bunch of pieces of the economy that an organization that puts it together called the Conference Board, they believe that the economy is less negative, is how they're describing it. More importantly, Jerome Powell did speak at the Jackson Hole Summit on Friday, and he didn't guarantee by any means, but he strongly hinted at a 25 bip rate cut in September. And as we'll look at, the market certainly reacted to that. The Treasury yields came down, the public equities came up. And really what he's talking about here and what he did speak about explicitly in his speech at the Jackson Hole Summit on Friday was that, inflation is down. It's not at the 2% target yet. You remember that the Federal Reserve really only has two jobs as a central bank. They want to keep inflation to around a 2% target, and they want to keep unemployment as low as possible, typically around 3-4%, something like that. So inflation is coming down. And he does keep mentioning this, well, I'll put in quotes, cooling labor market. And if you keep hearing that and you don't know what that means, basically a cooling labor market means that, and it sounds like a bad thing, but you basically have more people looking for jobs than jobs are available. It's actually a good thing in a way because it means that the labor market's relatively efficient. When you have a lot of people out of work, that is obviously not a great thing, and then that's when employment starts to rise. So it's this kind of equilibrium of we want to keep unemployment low, but we also want to keep the labor market as efficient as possible. Jerome Powell feels like we're getting there. Another, or a few other reports that came out last week as well is really around housing. So, the mortgage applications, they seem to be growing. Basically for the last 12 months, they've been steadily increasing. I think about that as liquidity. How can you buy a home? And it seems like folks are willing to do that, especially with the promise of, I shouldn't say promise, but the hint that rates are coming down. The second data point is new sales are up over 10%. So these are new builds, basically. I think about that as supply. So you have folks not only buying these homes, but people building them. And then existing home sales were also up about 1.3% last month. So I think about that as demand. So all of those things are good. If people have the ability to buy a house, there are houses to buy, and they want to buy those houses, that's a good thing for our economy. So all in all, the summary is, we seem to have this rate cut, this 25 bit rate cut that will be happening in September. The market is kind of pricing that in already. Again, treasuries are coming down, the yields are coming down, public equities are going up, and the rest of the economy seems like it's becoming more healthy. Inflation's coming down, the labor market is certainly cooling off. Yet unemployment is rising a little bit, but certainly not to any level that would worry anybody. So it seems like things are going the way they're supposed to. So from the market news side of things, again, I always look at two sides, the economic news and the market news. I just wrote down the beat goes on. So I actually looked at all, for last week, all of the mid cap and above companies that released earnings last week. So again, this mid cap and above is basically a market capitalization of $250 million and above. There were 83 of those, and 66 of those, or 80% of them, beat their earnings estimates, which I think is amazing. So again, we talk about prices, prices are high, yet companies are able to figure it out. So I think it's a good thing. We certainly need to have a few more pieces fall in place for me to be convinced that the bull run will continue. We'll look at the indexes in a minute. But I think it's pretty amazing. Out of 83 companies last week, 66 beat, which I think is pretty great. So as I mentioned, after the Powell speech, equities went up, treasury yields came down as we'd expect, meaning the market at least has a bullish attitude that if rates are going to drop, maybe we can get back into the buying cycle of some of the, the large kind of public equities that we saw in the first half of the year. But, day over day in the market, we kind of had a buy day on Monday in the indices, then a sell day, and then a buy day, and then a sell day, and then a buy day on Friday. So it kind of seems like it's back and forth. Again, we'll look at this in the chart in a second. And the S&P, the NYSE, and the Dow Jones are actually back at their highs. So they dipped down in the beginning of the month, but now they're back at their highs. The NASDAQ is not, however. It's lagging a little bit, which, again, leads me to believe that investors are more looking at maybe some safe defensive stocks that, really speak to the composition of the S&P and NYSE and Dow Jones. The NASDAQ is not really at its high yet, meaning technology, which is very heavy in the NASDAQ clearly, is lagging behind a little bit. When we see these large bull runs, we really like to see technology leading the way. It means people are willing to invest in that kind of thing. We're not really seeing that right now. That's not necessarily a bad sign either. We need a few more weeks. We need a few more data points. We need a few more, just some time to go by to figure out kind of what's going to go on here. So, with that, let's look at the indices. So I'll bring up my trading view. And this is what I'm talking about here. So right now, these are daily charts for the S&P 500, the NYSE, the NASDAQ on your bottom left, and then the Dow Jones on your bottom right. And really what I'm looking for here, and we actually started to hit that this week, is draw here. So we had these highs here, and we seem like we're back at the highs. Even on the NYSE, maybe even a little above those highs. Same is true here on the Dow Jones. But on the NASDAQ, we haven't quite hit this high yet. So we're still moving up. However, it seems like technology, this leading sector, is lagging behind a little bit, which leads me to believe that folks are investing more in kind of defensive or conservative securities. As is, the Dow Jones is made up of these, S&P, NYSE is made up of these primarily, things like that. So I just think time will tell. I'm not totally convinced that we're on a bull run yet again. I think we're waiting and seeing. And what I also look for in charts like this is the volume. And as I mentioned last week, we had a lot of sell-off volume. I'm on the S&P here now. A lot of sell-off volume starting kind of in the beginning of the month, but we haven't really seen that buy volume yet. It hasn't reached those levels that the sell volume saw. So to me, that just seems like, yep, there's this bit of a rally. I just don't know how strong it is. If I see, really strong sell volume after a sell-off, really strong buy volume after a sell-off, that's usually where a bull run comes from. I'm not quite seeing that yet. I'm actually not seeing that on really any of the indices except for the Dow Jones. Dow Jones has some of this stronger buy volume, but again, Dow Jones is pretty conservative. Only 30 companies, and certainly not tech heavy like the NASDAQ. So it leads me to believe that there are some buying opportunities out there, but they're not as maybe risk on as what comprises the NASDAQ or something like that. So from winners and losers, again, this is something that I also look at. Basically, what companies did really well last week, what companies maybe did not do so well, and why is that interesting? So just to bring a few of them up here, and I always kind of pit them against the general S&P to see, how they're doing against the overall market. Kava released earnings. Kava released earnings last month. and did really well. So they were kind of number one last week. You can see they really popped off here. I happen to be long Kava, so that was a good day for sure. But we had a bunch of others as well. I'm not only looking for earnings pops. That's obviously great and exciting, but you can't really build a portfolio, on earnings pops. But we want earnings to maybe be the start of something pretty significant, or maybe the continuation of something significant. And we do see that in Kava. So this is a 4-hour chart, basically going back to the beginning of July. And we see that Kava, is a strong company to begin with, but maybe they're on the start of something great. A few others that I wanted to point out, Evolent Health. Again, had earnings, but then earnings were kind of the start of something great. You don't just want an earnings pop, this gap here. You also want some good continuation, as you can see, really outpacing the market from the beginning of July to the kind of current time period here, with a lot of buy volume. So those are things that I'm looking for that are really great. And then Target would also be another one. Again, seems like, kind of a boring company at times. Retail. But sorry, let me go back to this time frame here. If we go back to the beginning of July, we can see, basically pacing the market. Had some really strong earnings though, and again in the retail sector, maybe being a little bit of a defensive sector, seems like that's popping off. But then again, some heavy sell volume here, meaning maybe people are locking in their profits, or it's the sellers are just getting shaken out, right? And the buyers are now going to take over. We could see some good bull run here, especially if the economy heats up. A stock like Target could be a really great one. Some of the losers are. Intel has really been up against it lately. So, excuse me. So, this is a stock personally I would avoid. They just have a lot going on, not only within their company, but especially as these industries rotate, out of the tech space, not a good stock to be in, and ones like it. HP, again, in the tech sector, always cognizant of firms like, that are rotating out of their industry, and then actually Discover in the finance industry. Just two companies that had a pretty bad week last week, maybe not rebounding with, some of the other sectors that are coming into rotation. So, as we talk about sectors and rotations, and these are things I strongly recommend folks pay attention to. What's hot, what's not, what are people buying, what are people selling. Really understanding what the market is telling you at any given time is extremely important. How I do this is you can look at individual stocks for sure, but you can also cheat and look at things like the sector spiders that are put together by State Street. So I just have a few here. Sector spiders are basically ETFs that are only for a particular sector. And if we look at something like the utility sector, really doing well. Again, going back to July, but really doing well in the relative to the overall market. If you think utilities, are really powering the market, again, seems like kind of a defensive position, a defensive holding. Number two for growth in that time period is real estate. So XLRE is the ticker for that. Again, really strong chart over the past 60 days or so. And the last is consumer staples. So if consumer staples, utilities, and real estate are the sector spiders that are popping off lately, I think it's pretty indicative of what's going on with the market. It just kind of seems like a wait and see period. We'll see if tech comes back. We'll see if consumer discretionary comes back. We don't know. And you can see that, like, let's just go to that now. So consumer discretionary, which again is another sector spider, kind of lagging the market, right? Same is true with tech, for sure. Really lagging the market here. And then finally energy is the last one. So, again, I always recommend pay attention to the market. You don't have to predict the market, who can, but what's more important is really, really paying attention to what's going on right now and what are folks, getting into and out of. That can be really, really helpful. So, all right, that's it for industry rotations on the chart. So let me flip back here though. I won't cover the ones I covered last week, but the bolded ones here I didn't cover last week. So for those on the podcast, things like medical equipment and service, oil and gas, telecom, electric, mining, those were moving up last week. Still are this week. But the new ones are non-alcoholic beverages, local banks, newspapers, tobacco, food. Again, I think kind of defensive holdings. These aren't very exciting industries. It's certainly not computer hardware and semiconductors and things like that. And again, that just leads me to believe that folks are still looking to buy things, but it's maybe going to be a little bit more conservative, a little bit more defensive. Things that are moving down, again, for folks on the podcast, I can't see the slide. What I covered last week was, computer hardware, consumer electronics, semiconductors, solar energy, industries like that. And in addition to those, this week, I was taking a look at payment processing, medicines, leisure, retail, steel, machinery. I think interesting pieces here, retail, leisure, payment processing, fintech, things like that. Those are still moving down. So again, seems like more of a defensive holding kind of period for a lot of investors right now. But we do have a lot of earnings this week, which we'll get to next. So who knows? So I think once we see that, and again with the economic information that's coming out, it could be possible that this stuff could rotate back in. But as of right now, this is what it looks like. So let's get to next week and what that looks like. For economic news, we have some really great data coming out next week as well. Probably the least interesting, but I still think it's kind of interesting. Durable goods, just those staples. What does that look like? But what I'm really interested in are these next three. On Tuesday, we have the home price index that comes out. Really, obviously, we talk about inventory of homes and people, the willingness to buy homes with mortgages, but the price obviously is really interesting and important. So especially as rates, strongly hint at coming down potentially, I'm interested in what the pricing looks like. Initial jobless claims and the GDP update comes out on Thursday. Obviously, that's a huge one to see how we're stacking up again to our targets. And then finally, the PCE, which if you don't know what the PCE stands for, I actually put it on the slide, is personal consumption expenditures. And that's a proxy for inflation. So we're going to get a readout of that. Again, we'd like inflation to always be around that 2% kind of annual rate. Right now it's hovering around 3, so it's coming down, but not quite where we want it quite yet. So the summary here is it'll be interesting to see how GDP, the cooling job market, this demand for homes, pricing for homes, all of that kind of plays into what the market is doing in terms of its equities. So earnings and market news next week. Excuse me. So NVIDIA releases, their earnings Wednesday after the bell. I would say here, again, this is not, investment advice, but this is just historically what we see. When we're at these kind of market tops, we actually saw this with Dicom last week. Even if a company has really great results, and this may happen with NVIDIA this week, the price could actually come down. So it may pop up initially, kind of like we saw at Target, and then, come back. That's something I'm always paying attention to and looking at, because it could mean that, yes, this company is releasing great earnings, but people aren't taking the bait. It's say we made a ton on NVIDIA and 23 and 24, we're kind of out of it. So that's what I'm waiting to see. Does this kind of carry through? Does this bring tech back in favor? CrowdStrike, obviously, given what happened a couple months ago, I'm interested to see, what happened with their financials. And then again, I kind of highlighted some boring ones here, or maybe, boring ones, but the boring ones to me, I think are interesting because they can actually tell you what investors are thinking about the economy. So I have, Lululemon and the Gap, Ulta, kind of on like the retail side, like the discretionary retail side. And then maybe more staple type pieces like, Dollar General, and then, some tech stuff, but in retail like Best Buy, and Chewy, also releases next week. So there is a ton of earnings coming out next week. And I think it's going to be really interesting to see, what that means for our markets, because again, we're, the S&P, the Dow Jones, the NYSE, we're all at these highs right now. But to me, that's an interesting data point. But what's really interesting is what happens next. Do people take the bait? Do we get back into some of these sectors that did really, really well in the first half of the year? or not? Do we rotate out? Do we get into some more defensive things? It seems like that's happening already, but I really do think the next week or two is going to be, really telling of what's going to happen next. So, quote of the week theme. Excuse me. Quote of the week theme is patience. Again, it's so easy to get excited and want to do a bunch of, maybe trades that aren't the proper setups or going to get you to where you want to go. So I have a Paul Samuelson quote here. I actually went to Boston University and took some classes with his son, which was kind of cool. But Paul Samuelson is, I think, a Nobel Prize winning economist. So his quote here is, investing should be more like watching paint dry or watching grass grow. If you want excitement, then go take $800 and go to Vegas. I think it's a funny quote, but it's true. When these markets and things aren't setting up well, and there's these industry turnovers, you gotta stay patient. I told you last week I'm only handling, I only have a few equity positions. I did buy a couple more. Like I said, I bought Kava, which worked out really well. But I'm gonna hold these things, and I'm not fully deployed with my capital right now. We gotta wait and see. We gotta see what's gonna happen with these markets, and then we can jump in. And if things go maybe in the bear direction, which I don't really think they're going to go. But, fine. We're not heavily invested and no big deal. Or, if rates come down and things really take off, great. We can get back in, but let's wait for confirmation first. Let's make sure that we're kind of doing our due diligence and we're remaining patient would be, something that I'm certainly thinking about. All right. So as I sign off, a few things to keep in mind here. We do have a Discord. Please join it. It's a ton of fun. It's basically, if you don't know what Discord is, it's kind of like a chat community. But there's different rooms. There are voice channels. You can ask questions. You can just read, some of the chats and questions. We have forums in there. The idea for Accessible Alpha is very simple. It's to connect professional traders with retail traders, with students, with anybody that's just passionate about the markets, and really just kind of, take, provide information such that you can be more effective in markets. That's really it. And then you can ask questions and do all sorts of stuff. Please join the Discord. It's a ton of fun. The link is going to be in the YouTube video. So if you're on the podcast, head over to YouTube. Again, it's just the Accessible Alpha channel. And if you're on the YouTube, if you're watching YouTube right now, please subscribe to our channel. Like the video. That stuff really helps. I know every YouTube video says it, but it's definitely true. And if you're on the podcast, please rate the podcast. Please follow the podcast. The intention is to get this stuff out every Monday morning at 6 a.m. Mountain Time where I am, but 8 a.m. In the East Coast. And even though it's, I'm not feeling too great, I wanted to make sure this stuff got out because I think it's going to be a really awesome week. So thank you so much. I really appreciate you watching or listening. Have a great week and good luck in the markets.